Hello, welcome to WINFXTRADING Trading YouTube channel, the only channel that has been optimized to make you rich trading the Forex synthetic market. If this is your first time of visiting my YouTube channel, do your best to subscribe and turn on the bell notification so you get notified each time I upload a new content. Try to like and refer this channel to your network so YouTube pushes to a higher level of audience. It's been a long time I get long videos. It's more of shorts some of these times, and right now this topic is gonna change the way you approach the market. The topic is daily band concept in Forex synthetic market. I will continue this topic on theoretical parts and extend it to practical aspect of it. So make sure you stay to the end of this video so you get the most part of this. Okay. Right now you need to understand the technical part of this. So what is the meaning of band and what is the meaning of daily? Okay, you see, most of the things that happens within the day actually is governed by lower time frames that constitute the day. So the daily time frame actually is made up of the 4-hour time frame. So the daily time frame D is equals to 4-hour time frame. So these are groups. Okay, so I'm gonna put it in a block bracket plus 1 hour time frame. So these are group, meaning that they can be broken. They are breakable, like they are breakable. They are breakable into lower times. Okay, so this is M30 and this is M15. Okay, in a block bracket, this is M5. Okay, and this is M1. Okay, then we could possibly have S S1, that is 1 second time frame, and then tick. Okay, but I'm not going to write the tick in the equation, but it's there, you can put it. So we see that the daily time frame have all this time. Now each of these time frame have their own pointing vector. Okay, where the energy flow. When I say pointing vector, I mean where the energy flows. Okay, so the 4-hour could be buying while the 1 hour is selling. The M30 could be buying, okay, while the M15 is selling. Or they can actually be doing like two or more time frame could follow the same direction, while 2 or more time frame could follow a different direction. So that is variations in time frames. Okay, so in the daily time frame, there are a lot of fights from the lower time frame. The daily time frame is a kind of superset of 4-hour, 1 hour, M30, M15 down to tick time frame, meaning that it's a universal state consisting of subsets, like consisting of other lower sets, and each of these try to bend the daily action in the market. Okay, so if a price function follows this path, this trajectory, and reaches a critical maximum point, it does not continue or it does not reverse automatically. It creates a range state. Why it is creating this range, it follows a relativistic curvature, like it follows some sort of curvature relative to certain frame. And this what makes a lot of people lose a lot of money. So what I'm trying to say here is, if we take this session as our maximum price, or like as critical points, like we have like saturation level where the market have reached and it's supposed to saturate. It's supposed to be like the market is going to lose energy, like the market is over traded at this session. It does not just it doesn't just continue going up. Let's say this is uptrend market, it doesn't just continue going up, or it doesn't just reverse going down by reversing. It doesn't do that. What it does is this market have to range. It have to create, we assume this is a bullish market before, so it have to create support and bounce off from it, and most time it will come and pick and pick or grab liquidity at a obvious order block at certain higher time frame in the dailies, especially the 4 hour, and then pushes up again. Now, what makes you to lose a lot of money is you think that, oh, the market is overtraded, and this could be a weekly downtrend. So an uptrend actually occur in the daily time frame, but in the weekly and monthly time frame, the market is downtrend, and you feel like you want to start selling this market. You are going to lose a lot of money doing that, because the market have to follow some sort of range and curvature before it will actually change direction and follow what the week and the month is doing. Okay, so I'm going to start to actually show you some of this in reality, because this video tends to stress me a lot, but I'll not give up on it, because there's something hidden inside this content that will actually change the way you approach the market. You see, right now we need to consider 𝒖/USD. For instance, the market opens, I think this trade, because I don't know exactly where the stop loss supposed to be, so it's a big account, so I have to place this trade without a stop loss, because I feel like I'm expert in this kind of stuff. So once you go in my direction, I will not put the stop loss. That's why don't try it on your own, because unless you have big capital, don't try it on your own, you might lose your money. Okay, so that's good. Now look at what I'm trying to explain here. This is daily time frame. So we have a market that creates an uptrend of certain level of energies. The energy content of this uptrend is actually different from the energy content of this uptrend. The reason being that the compression part of this market, like a kind of pullback, is like the energy content of the pullback is close to zero in this session. Why in this session the energy content of the pullback is at least maybe 20 to 25% of the energy content of the impulse. And so we say that this session has a very massive energy content than this session, and because of that we have to treat this market with care to avoid doing something that will work against us based on the bend actions. Now this market move with heavy energy and reach this critical point, which is the maximum. Okay, now and start creating a selling event. This is a selling event. Okay, so what happens is that some people will come here and pick a sell, because they think that, because not everybody will have patience for market to develop a visible geometry, because if you are trying to sell the market, then it will have to create a selling plan, which you have to model with two banded plan. But if you try to actually model this market with two banded plan, then you take this turning point and then take this turning point. Okay, and then you will be like, you are going to actually draw the parallel line to this, making it a plane, and then you are going to get this using this, and then you think that, oh, the market have changed trend and then it's going to sell. But that is wrong, because the bend characteristics of the market have to take place. The market doesn't change direction abruptly. It have to be delayed, range, rotate, and then like it have to curve. That curvation process is called rotation. While it is curving or rotating, it creates spikes depending on the direction of the previous move. It creates spike. If it is a buy market, it creates spikes to the downside, and also it creates spike to the downside, triggering people's stop losses who are trading against the previous move, and then create spike to the upside, grabbing liquidity against those that enter, like that follow the previous direction at the wrong time, and then making them to lose more money. Like, because the market is actually ranging and rotating in this session. What I'm trying to say here is, instead of you thinking for sell on this market, you think for buy. Because based on this bend idea, the market, if a market creates enormous energy on a given part, it continues to remain on that part and that direction, then you think to reverse it. That is the idea. So for here, instead of you to think for a sell, what you do is you wait for market to come and grab liquidity on this other block. And that's what happened. And immediately it happened, what happened? The 𝒏/USD accelerated. And so this is what I mean by bend. It accelerated because it have to pass through this bend. Okay, so if I'm trying to draw the coverage, the geometry of what I'm trying to say, you discover that this market reached this session. This is the critical maximum over traded price or resistance, right? And then it pulled back by some fifth level, grab liquidity here. Maybe this could be 32.8%, or maybe between 38.2, or between 38.2 and 50% fifth level. The market reach here, attacking this liquidity zone, which is a neckline. If you go to lower time frame, you see that, and drop. So this movement here and the movement down, which does not replicate the previous trend characteristics of the market, shows the market ranges, and then it came here, grab liquidity, go up again, okay, with a kind of some sort of trend. Okay, now this idea of range of not trending but ranges and then creating of spikes in both direction, both up and down, is called rotation. So market have to perform this as much as it can before it will tend to do something else, and it's still performing that rotation. It's the energy content of the previous buy action is still alive. Okay, that's what you have to know. It's still alive. It's better to think of the market based on the energy content of previous action than to reverse the market. Okay, all you need is to put your risk management in place. So that's what it is. Okay, let me give another instance before I'll be closing this video, because I don't expect it to be long. This is a support level, absolute support level, because it's an absolute turning point. The market spike up impulsively in the daily time frame. Even though there is high resistance here, that doesn't mean that the market will reach here and drop. Nah, it will pull back to some fib level, rotate, range, and then make decision to see if it will go down or go up. So who will win? Who will win is the person that believe on the previous action than what you want to bring into the market, or than induce action, which is reversing, or an action that is not dominant before. So a sell is not dominant, but buy is dominant because it's visible. You see it. This sell that happened here is dead. So the market will respect this active part than to respect this part. Thank you, and bye for now.